Hello and welcome to a very special edition of Property Hotline with me, Kavita Krishnan. Now, the war against black money is expected to have a tremendous and a long-lasting impact on real estate. It is expected to make real estate much more transparent and consumer-friendly. But how will it impact you, the home buyer, in the short term? That is a big question we are answering today on Property Hotline, and we'll be answering this question all this week. So if you're in the market to buy, sell, or invest in real estate and are worried about the impact that demonetization could have, get in touch with us now. With me in the studio today is Arvind Nandan. Arvind is the Director of South Asia for Valuation and Advisory Services at Colliers International. Arvind, welcome to the show.
Thank you very much, Kavita.
Arvind, before we get started, a quick question to you. What, in your view, is going to happen? Will prices come down? That's a big question that every viewer is calling in and asking.
Well, it's a question that has many parts. So obviously, the general answer is yes, the prices should come down. However, one has to really specify what that means. So the prices coming down or the impact will probably be in 2 or 3 different phases. The immediate phase is when in the next 3-4 months, there could be a stalling of transactions in the market because of a lot of problems that have been, people have been facing, particularly those who had a lot of cash. So that part could lead to a stalling. But the second phase that starts thereafter should see a bit of pickup in transactions, and that's where I believe the transactions will happen, but the prices should also be a little more favorable. Now here again, one has to keep a difference between primary sales of residential, secondary sales, commercial sales. They all may behave differently. And over a year or so, don't forget, apart from demonetization, there are other things that are going to take place. There is a Benami Transaction Act that's about to come. You will have RERA, hopefully.
Right, but Arvind, you're not giving the game away yet. You're using words like favorable to buyers, etc. I will, of course, keep questioning you on that point. But let's get started with the show. We have some good news coming in first for all you buyers out there. Axis Bank has reduced its marginal cost of fund-based lending rate by 15 basis points. What this means is that your lending rate for your loans has come down by 0.15% for up to 1 year, for loans up to 1 year tenure, 20 basis points, that is by 0.2% for 2 and 3-year tenures. Now, the reduced MCLRs will take effect starting 18 November 2016. And it is not just Axis Bank, other banks also have reduced MCLR lately. These include the State Bank of India, the Bank of Baroda, and the ICICI Bank. Now, it is too early yet, right, Arvind, to actually connect this with the demonetization. But one thing is clear, home loan rates are going down. So if you're in the market to buy a home, this is a good time to go out and get a good deal on your home loan. Let's start with our first question for the evening. It comes in on email from Vinod. Now, Vinod says that he's looking for a 2 BHK flat in Andheri East. Now, he had finalized the deal, Arvind, for 1.5 crore rupees with the developer. But he now feels that the demonetization will reduce property rates. Should he wait or go ahead with the purchase? 1.5 crore rupees is what he's closed the deal at. What should he do?
Well, there is always a fundamental line that we take, particularly as real estate consultants, that a purchase is best made when you have enough funds with you and also when the right property is available. So in case you have got this property at the right price, go ahead and make the purchase. Yes, of course, like I was saying earlier, there is a very bright possibility that the rates will decline. But there is a 2-phased decline there. The first 3 months, you may not see any transactions and may not see willingness on the part of sellers also, if you are in the primary market. After that, the prices should actually show the real correction. But if you have already concluded your deal, if it has been already signed, we don't have enough details because he is on email, then I would say rather go ahead and lock it in rather than wait for something to take place in future.
But look at the rate that he's getting. He's getting a 2 BHK in Andheri East for 1.5 crore. My team will put up the rates for Andheri East in a moment. But tell me this, do you think that this is the fair price for a 2 BHK flat in Andheri East?
Well, that is pretty much the prevailing rate as of now. fair price assessment is a different matter altogether. But that's pretty much the prevailing rate. We don't know the size of the property. Assuming it's about 1,000 square foot or so, you're probably going to be paying at about 15,000, 16,000 rupees a square foot, which is pretty much the going rate. Yes, if you were to hold on to it, and if these conditions that I said earlier apply, you may see a decline of rates. It's difficult to say by what percent, but another 8-9% might correct.
So essentially, Arvind, what you're saying is, if you like the property and and like he said, if it's around 1,000 square feet flat, you are getting it at a decent rate. This is the price that is prevalent in the Andheri East market. So if you really like that property, then just go ahead. Don't try to time the market, is what you're saying, right?
Yes.
Okay, moving on, we have another email question now from Shyam Sundar. He wants to purchase a 2 BHK property in Navi Mumbai for end use. He wants to know, will there be any appreciation in future for the property? Will demonetization bring down property rates? Now, this is what is worrying everybody, especially those who are, a lot of people are buying it for end use.
Yeah.
They have to live over there, but they want to see that property that they are putting all their money into, appreciate over time.
Yes. In fact, I like this question. And the simple reason is that the buyer appears to be in early stages of taking the call rather than having taken the call. So in this case, I would suggest, if you haven't really logged in on the property, just keep analyzing the market for a while. I would say next 3 months, just keep watching the market closely. My guess is that in 3 months' time, you'll probably start getting properties at a more favorable rate, which means your entry will become a little better. And obviously, if I go to the market dynamics, Navi Mumbai, he hasn't said where in Navi Mumbai, but let's say, if I assume from anywhere from Kharghar till Khopoli, if you are there in that belt anywhere, the future is absolutely bright. There are many factors like the new airport, the Trans-Harbour link, and many things coming up in future next 10 years dial if you took. So definitely it's a great market. It's going to appreciate for sure. You have to be a long-term investor for that. But if you haven't entered, wait a while, you'll probably get a little more favorable rates.
Arvind, I don't really think that end users, people who are buying property to live in, or people who are investing in it in property, say for the five-year term, with the 5-year horizon, should they really be worried about demonetization and its impact? What is demonetization, just a blip in the property market, in the in the lifespan of the property market, or is it going to be like this huge watershed event? Something say on the lines of the meltdown that we had seen in the stock markets.
Well,
how do you see it?
I think it's important to clarify that impact of demonetization as a buyer who was about to pay cash is different from somebody who's going to take a position in a property that, as a result of demonetization, may correct its prices. So if you are somebody who was willing to pay cash and suddenly you find yourself stranded, then that's a very difficult and a different position. But if you are somebody who is just trying to time the market, like Kavita said earlier, on the basis of these developments of demonetization, then you probably have a better chance to just watch it for a while, because your entry point may become a little better. And although you are a consumer, you're probably not looking at making a capital appreciation on that. It doesn't harm if your asset is growing at a good rate in the next 8-10 years. So therefore, if you are a fair buyer, if you are just wanting to time the market, wait a while, I would say. Wait another 3-4 months. And then when the impact shows, at that time enter the market.
Right. Now, Mukesh, I believe, has called in from Thane. Mukesh, what's your question?
Yeah, I'm Dr. Mulchan Talreja. I'm planning to buy a house of self-use in Thane.
Okay.
So my question is, after demonetization, the resale market is sure to come down. Now, will it affect the primary market also? If yes, when? And if no, how?
Mr. Mulchan Talreja, I'm sorry I got your name wrong. Tell us this. What is your budget? Are you looking at property that you're buying directly from the developer, or are you buying resale property?
I'm open to both of them. Whenever I get a better margin, I'll continue with that. So I'm planning, my budget is 1 CR for 2 BHK.
Okay. And
So
this
my
you said is
question
for
is
end
after-
use, right?
Yeah, end use for myself.
Right.
And
1 crore for 2 BHK. Should he wait? What should he do right now?
Another small follow-up question for Mr. Talreja. Any specific part in Thane that you figured, or are you open to everything or anything?
I'm looking near around Majivada area.
Majivada, right. So that's one of the better areas, and which is probably going to have a better impact of the property prices. Yes. So your basic question was whether to get into primary or secondary. Now, I'll elaborate on the point that I was making earlier. We see there is an impact in 3 months and thereafter. Now, let's break it down for the sake of general knowledge of people as well. In the initial 3 months, I think the primary markets will find it a little difficult to survive. However, the secondary market sales should continue to go on with a possibility that people will want to factor in demonetization and sell it at whatever rate they can do. 3 months, 4 months later, and we will have a budget by that time. It's going to be in February, the first week of February. By that time, we will have a little more clarity, and the primary market should start to pick up then. So if you are going to do it in the next 3-4 months, I would suggest go for secondary sales where you can negotiate well. After that, you are pretty much open to primary or secondary as well as secondary, and then see where the best rates are available. Majivada in particular is that belt where there is a lot of development taking place. 1 crore is a very good budget for that area. You have branded developers, quite a few of them. So if you are wanting to wait till say March or April, then I would suggest look at both of them evenly, see where the best deal is available. If you're doing it very quick, then I would suggest try secondary market first.
So essentially, essentially what Arvind is telling, and this is for all viewers out there who are looking to enter into the real estate market at this point in time, if you can wait, then hold your horses, hang on for at least 3 to 4 months, let the market settle down, let the impact of demonetization trickle into the market, and then go. You'll probably find that the primary market, this is the homes that you're buying from developers, will probably become a little bit more cheaper, will be more reasonably priced in a 3 or 4 months time. However, if you're in a hurry right now, if you want to buy, if you want to close a deal, then you'd be better off placing your bets on the secondary sale market, which is the resale market where you're buying from investors or where you're buying from existing home owners. So if you're buying resale property, chances are you will get a good deal at this point in time. We have Jyotima now, who's called in from Bhubaneswar. What's your question?
Yeah, hi ma'am. Actually, just 2 days before I entered into deal, precisely on 8th of November, I entered into a deal where I paid 9 lakhs in check, and I will pay after 1 year another 40 lakhs from loan. And I am taking the project 3 BHK flat in Bhubaneswar. And so if I will terminate the deal right now, then I will be costing around 50,000. So is it right to hold or to terminate the deal, which I did just 10 days before?
Jyotima, you're buying this home to live in or to invest?
For living.
You want to live in this home.
Yeah.
And is there any specific reason why you want to cancel the deal right now, like you said?
Because the demonetization.
You're worried about the demonetization.
After 1 year. Yeah.
Should people actually go ahead and cancel their deals, deals that they've entered into because of demonetization, Arvind?
Well, unless there are some very specific reasons, I would never advocate cancelling a deal that you've already struck, because I think when you struck the deal, you had taken into consideration all the things that will work for you or may not work for you in future. So demonetization could have an impact because you're going with a home loan, that your home loan rates will become better. There is every possibility of home loans becoming better with interest rates coming down by a few basis points. There are quite a few contradictory numbers, but it is sure that they will happen. So your loan should become favorable. The property that you have selected must be for a reason, so don't cancel it, please. If you're thinking that the price that you've paid is too much, then if the developer starts quoting a fresh price, then you always have a possibility of asking to be paid on the asking to pay on the fresh price. But I won't say you cancel the deal just because you think suddenly you may lose money. I don't think that's fair.
I think the problem, that the worry that callers like Jyotima and all, buyers in the market are having right now is that there are a rash of rumors going around. There are too many rumors in the market.
Yes.
Some saying that property rates can actually go down by as much as 30, 40 and even 50%. These are numbers being bandied about. Do you actually see that kind of a correction in the market?
I don't think so, and there has to be some mathematical logic when we say these things. Let's say we say that about 30% of the transaction or the 30% buy volume is being done in black, and that should suddenly get shaved off. Okay, agreed. There is a 30% correction. At the same time, that should eventually get offset by the pickup in demand because the prices are becoming favorable. So if the demand picks up by another 10-15%, the net impact that you will eventually have is only about 15, 16, 17%. So let's not get misled. And there's a lot of rumor in the age of social media where anybody can make a calculation of his or her own and start circulating it. So please don't go by that. Please have a good tax consultant, a good valuer or real estate consultant who guides you properly. Please don't go by rumors like Kavita was saying.
Right. Also, another thing, now it's easy for one to approach property consultants and valuers, like you just said, in the bigger metro cities. Now, if you are buying a home in a tier 2 or in a tier 3 city where you might not have access to property consultants or the organized trade in real estate, where do you actually go? How can a lay person, gauge the market and see whether he is being actually offered fair value for the property?
Well, Kavita, that applied only till about 4 or 5 years ago. Today, with Magicbricks Now and several others, you can very well write to them, you can tweet to them, and I'm sure these things are not going unnoticed. So even if you are physically unable to reach because you don't live in a metro city, there is every way that you can reach out to people who can give you proper advice, or maybe just reach out to a corporate, write an email to them, ask for advice. There are various ways. So of course it makes it a little more easy if you live in a metro where you can straight away walk into somebody's office. But in this age, I don't think that's a problem at all.
Right. So you have the world of internet. Go out, do a search on the internet. We also keep showing property rates all day, every day on our ticker. You can use that also as a guide and use all of this. Plus, go out in the market, look at what other developers are, demanding for their specific properties, which are similar to the one that you are planning to buy. Do your homework, do your due diligence. The basics never change in the real estate market. You need to do your research. You need to get that agreement vetted by a lawyer and then go ahead and sign that deal. We have Ramamurthy from Bengaluru who's called in. How can we help you?
Hello.
Yes, Mr. Ramamurthy.
Ram from Bangalore, I have invested in a luxury row villa as an investment option, about 3,000 square foot. There are 56 villas. It's almost ready. In December, I am likely to get the possession. Landscaping is on. I just wanted to know what could be the likely secondary market value, because I had invested about 18 months back. And also the rental demand on this area is about 4.2 kilometers from Infosys, and from Silk Board it is about 7 kilometers.
Okay. Okay, what is the specific area that you said, the locality? You said it is...
Locality is on the Hosur Road, main road, slightly on the, before the bridge, before the Infosys flyover. It's about 4 kilometers from the Silk Board.
Right. Ram, I think Arvind has already zeroed in on exactly where your property is located. What do you say, Arvind, and especially for buyers like Ram who are about to get possession of their homes that they've invested in?
Yes.
Will demonetization really affect it? How will it impact?
Well, the earlier wisdom still continues. You've made an investment, you are about to get possession. So there is, I don't think there is any way to start thinking if your decision is right or not. It's absolutely a right decision. Go ahead and take the possession. As far as the secondary market is concerned, I think there were two parts in the question. What about the secondary markets and what about the rental possibilities? Right. So secondary market for your property, I don't know how it impacts you, because if you're going to use it, you shouldn't be worrying about it. But still, for the sake of theoretical knowledge, secondary markets for a property owner...
Arvind, it's an investment. He made that clear in his call earlier.
All right. So I think I missed that point. If it's an investment, obviously if it's an investment, you're looking at a rental yield. And rental yield across the market is about 2 to 3% as of now. In your kind of property, and that's a great location that you're in, you can expect somewhere between 3 to 4% even. One can always take a firm call after looking at the property, but that's the range that you should look at as rental yield. Now, in the secondary market, like I said, there will be a bit of pressure for the owner, not for the buyer. Buyer will probably be in a favorable position. So, there will be a bit of pressure in about 3-4 months, going up to a year maybe. But I don't know how it impacts somebody like him, because I don't think he's going to sell it as of now. Rental is a good market. However, please remember, rental demand is very high for apartments rather than for independent houses or row houses. So you will have a very limited market where some people specifically in need of taking a row house are available. So you have a smaller market. Secondary sales wise, I don't think this is the best time for you. Just go ahead, take the possession, expect a rental yield of anywhere between 3 to 4%, and let it work for about 3 years or so, because that's the normal cycle, and then probably take a second assessment of what's happening with the property.
Right, so Ram, very clear instructions over there for you. Bad time to sell. Do not even think of selling the property at this point in time. You'll do better to wait it out, wait for at least 6 months to a year, and then look at selling. The other important thing that you need to remember is rentals. It's a good market for rentals, so do try and rent out your property. That should give you some kind of returns while you wait for the market to settle down, and then you can look at selling a property. And ideally, like we keep saying on Magicbricks Now, real estate is a long-term investment. It's best if you hold it for at least 5 years to get the best appreciation, to get the best possible returns from the home that you've bought. Arvind, before we move on, very quickly, 2 things from this particular question,
Yeah.
One is luxury property.
Yeah.
Will luxury property become cheaper? Because
Yes.
that is typically where a lot of black money transactions take place.
Yeah. And the straight answer is yes. I think the luxury property will become definitely more viable. On the contrary, affordable segment should remain greatly unaffected. But the higher you go in terms of ticket sizes, the better the deals might become.
So how better could the deals become? When you're saying that it will become more viable,
Yeah.
what is viable?
Well, like I said earlier, expect a general across the board impact of about 15-16% or so in the next half a year, around that much time. And then we will have to take a call from there, because there are other things which are going to come which will have a further impact. So there is RERA which is going to come in, it will restrict the supply. There is Benami Transactions Act that will come up, which may again restrict certain buyers from the market. So many other things will take place. Take one thing at a time, which is evident right now. And about 15-16% is what looks quite feasible at this stage.
Okay, 15 to 16%, that is how much you can expect rates to actually come down in the luxury market. And very quickly, Arvind, before I ask you the next question, what is luxury? Let's just look at the big markets. Let's look at Mumbai, Delhi, Bangalore, Chennai, and Pune. What is luxury over here?
Well, luxury means different things in different places. So in Mumbai, 1.5 crore or 2 crores doesn't sound luxury at all these days. So unless you are going 5 crore plus, you don't really count it in the luxury segment. But in smaller towns, you could very well count 2.5 crores as a luxury apartment. There is a way to define affordability and luxury. 6 times or 5 times the annual income of a mean population is what is affordable. Anything that goes beyond that or multiple of that starts counting as luxury, super luxury, etc., etc.
It's a whole lot of math you need to do over there.
Yeah.
But what you just need to remember is anything over 2 crores is inching closer to luxury. Can we say that? Not in Mumbai, in the rest of the markets. 2.5 crores is luxury.
Yeah, as soon as you start crossing
So that
3 crores,
is where you're going to see rates come down by 15 to 16%. What about the premium and the mid-income segment, which is where most of us are looking to buy our homes? The 1 crore, the 1.5 crores, the 2 crores.
Yes.
Sorry, the 1 crore and the 1.5 crore.
Yeah, I understand.
Where do you see rates going on?
Well, definitely there is an impact as well. I would say the impact could be lesser because in these transactions, the amount of black component even today is not more than about 30-35 lakhs. But in very large segments, the black component is significantly high. So in these cases, the impact could be much lesser. I mean, and when I say much lesser, you'll obviously want to know what number I'm talking about. So I would say anywhere between 5 to 10% is what you could expect. But the higher you go in terms of ticket sizes, the greater the impact could be.
So if you're a salaried professional and you're buying a home on a home loan and you're buying a mid-income home or a premium home, then you can expect rates to come off by around 5 to 10%, but you'll have to wait at least 4 to 6 months for that.
Yeah, that's what we said earlier as well.
Let's move on. We have an email query now from Manpasand. He's looking for a 2 BHK house in Thane, Ulve or Navi Mumbai. He wants to know which location is better. He's planning to avail a home loan. He wants to know whether there'll be any effect of demonetization on the interest of the loan amount. We've already given you the good news, 1%. Rates have come off, interest rates have come off. We've seen Axis Bank reducing MCLR today. ICICI Bank, BOB, SBI, all of them have announced a reduction. However, let me get Arvind then. Do you see demonetization impacting home loans? Because there is a lot of money that is coming into banks now.
Well, obviously, and I don't think there's anything left to see or conjecture anymore. It's already evident, so that's happening. Home loans are bound to get cheaper, more favorable. I think the primary question was, where should he buy? There is one missing piece of information here. What's the budget? So if your budget suits you, then I would say the best place is Panvel. If not, then Ulve is what you've mentioned already. Thana, if your budget is 1 crore plus, then, like we said earlier, Majivada or around that areas could be good bets. But if your budget is a little less, then I would say go with Ulve. Ulve is something which is in the vicinity of Panvel, Ulve, Kamothe both. They are very well connected to the Mumbai-Pune Expressway, great connectivity. And in future, when you have Navi Mumbai International Airport and Trans-Harbour link, you will be in a very good position. So if your budget is not very significantly high, I would say go with Ulve. If it is, then stick with Thane or someplace.
Right, and those are the rates up on the screen for you. Ulve is averaging around 5,764 rupees per square foot. And this is in the last 1 year, as you can see, rates have gone up 7% over here. We'll also have the rates for Thane and for the other market that you spoke about. You said Navi Mumbai. So we'll let us get you the rates for Panvel as well. Those rates will be up in a bit. But while we are talking about this, now this is one question that a lot of my colleagues in the newsroom have come up and been asking ever since demonetization happened. What happens to rentals? Will it become cheaper to rent, or will I have to pay a higher rental for the next flat that I take on lease?
Kavita, I think that's a great question, and it probably requires a whole lot of thesis analysis, but I'll try and be as quick and as short as possible. Rentals are the real reflection of housing demand, because everybody doesn't buy, but everybody lives, whether by buying or by renting. So rental does give a very good reflection. Now you have a situation here where we are conjecturing that the property prices will come down. The rental demand is not going to come down so significantly. So renting will continue. There could be a little bit of blip just because the buyers will think that they rent it out quickly. But from the owner's perspective, rental yields could get slightly better. It's very difficult to say how much better, but do expect a 0.5 to 1% increment over a 1 year period in renting. So if you are somebody who owns a property, renting is a good proposition right now. Your yields might become better. If you are somebody who wants to rent out, I don't think there is any change. In fact, you will probably find the market a little more favorable going forward from here.
So basically, bad news out there for all of those who are looking to rent homes, to take homes on rent. If you're looking to lease a home in the market right now or in the next couple of months, your rental could go up by 0.5 to 1%. That doesn't sound like too much. But if you are paying,
that's a very good yield.
Yeah, but if you are paying something like 20 to 30,000 rupees per month, and you have to pay 1% more, that is quite a bit of a. And especially if you're living on a paycheck.
Because your capital, the denominator, the capital value has squeezed a bit, and your rentals probably will not get squeezed so much. Therefore, the ratio becomes better in terms of yield.
But Arvind, you're talking from the point of view of the man who owns the house,
yes,
the landlord.
So therefore,
I'm talking from the point of view of the tenant.
Yeah.
So if you're a tenant in the market right now and you're looking to lease a home, there's bad news for you. chances are your rentals will go up in the next 4 to 6 months. However, if you're a landlord, you will get a better rental yield on that property. So if you are an investor, if you're in the market, this is a time that you need to hold on to your property. Do not exit your investments. Bad time to sell. And very quickly, if you are buying a home in the middle income category, if you're buying homes, hold on for the next 3 to 4 months. Look for, if you want to immediately close a deal, look in the resale market. If not, wait for another 4 to 6 months. You will see prices in middle income markets coming down by 5 to 10%. However, if you're looking to buy a luxury home, there's a whole lot of good news for you. 15 to 16% is how much prices can come off. Arvind Nandan, thank you very much for coming in and answering all those questions. We've come to an end of this episode of Property Hotline. But if you have any more questions related to demonetization and its impact on real estate, you know whom to call. Thank you very much for watching.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.